My next guest, though, sticking with his call that stocks will end the year higher from current levels and could rise as much as 20% by the end of next year. Let's bring in Ed Yardeni of Yardeni Research. Nice to see you, Ed.
Pleasure.
So, look, we said at the outset here that the bulls and bears seem to be in a battle. You know, we came into this month knowing that it's historically bad, but yet we've emerged somewhat unscathed to this point.
Correct.
Is that going to continue, and if so, why?
I think so. I was most worried about the CPI inflation rate, whether it was going to surprise us to the upside. It really didn't. I mean, it was sort of a mixed bag, but a lot of the inflation that we still have is in rent inflation, and I think that's what the market looked at. They said that, excluding rent, we're continuing to make progress in the CPI inflation rate. So we got that through that reasonably well, and I think we're going to probably see the market kind of hang in there through the end of this month into next month, going for a year-end rally.
And a part of the problem, though, is non-housing services remain really sticky. And now oil prices are going up again, too.
Correct.
So that's a double whammy that we can't take. Certainly you can't take if your prediction is as optimistic as it is.
Well, look, Scott, back in October, I predicted that we had made a low on October 12th in the S&P 500. And I thought we could get to 4,600 by the end of this year. Well, we got there by July. And when we got there at the end of July, I said, I think that's it for the year. And so, as you know, at the beginning of last year, the consensus was that the first half was going to be lousy and the second half would be pretty good. I had the exact opposite view, that the first half was where all the action was and that the second half would be kind of flattish. And that's kind of the way it's turning out. And so I still think we're not that far away from 4,600. Just a few days away, the way the market trades sometimes. But in the interim, there are issues. There's a backup in energy prices here. I am concerned about the bond yield being sort of on the cusp of possibly moving up closer to 4.5%. These could all be setbacks that could hold the market back. But I think all I would do is kind of hold back around 4,600. And then next year, I think as the economy continues to perform pretty well and inflation continues to moderate and the Fed clearly has topped out in terms of the Fed funds rate, maybe they won't come down that much. But I think the market can live with a bond yield of 4.5%.
We might be tested. I mean, the 2 years chilling out at 5%. And, I know there's not much expectation that the Fed is going to do anything next week, but most feel like November is still on the table. And speaking of the Fed, I want your reaction, Ed, if I could. Sure. Former President Donald Trump was weighing in on the Federal Reserve and interest rates in an exclusive interview airing this Sunday on Meet the Press with our colleague Kristen Welker of NBC. Take a listen.
The Federal Reserve is obviously independent, but I wonder, Mr. President, if you are re-elected, would you direct your Federal Reserve chair to lower interest rates?
Well, you know that I put a lot of pressure on him. It was outside pressure because nobody knows whether or not you can really do that. But I did because I thought his interest rates were too high, and he ultimately dropped his interest rates. The same gentleman, as you know. But it was a lot of pressure. I mean, I was very active on that. Right now, interest rates are very high. They're too high. People can't buy homes. They can't do anything. I mean, they can't borrow money. The banks don't have the money. The banks aren't lending the monies. The banks, by the way, Chase Manhattan Bank, Bank of America, they discriminate against conservatives. It's a disgrace, and they shouldn't be allowed to. And I'm going to do something about that. But you take a look at banks throughout the country, and I think because of the regulators, but you take a look at Bank of America and Chase, they discriminate against conservatives.
What's
and
the
Republicans.
evidence for that, Mr. President?
Oh, we'll give you plenty of evidence.
Okay, all right. Well, let's stay on track with this question, though. So just to be very clear, if you were reelected, would you direct your Fed chair to lower interest rates?
It depends. It depends. Depends where inflation is. But I would get inflation down because drill we must.
Mr. President, are you going to appoint a new Fed chair if you're reelected?
Well, I guess he would have 2 years left or something like that. So we'll see. But,
okay. All right.
You know the word jawboning? I did a lot of jawboning against him. And he ultimately lowered interest rates.
Well, you can be sure to watch more of that exclusive interview with former President Trump on Meet the Press with Kristen Welker. That is this Sunday on NBC. Should also note the same invitation to sit down with Kristen has been extended to President Biden, who has so far not accepted that. But do not miss that, and we wish Kristen well. certainly she takes over that program. So, Ed Yardeni, back to you. You want to respond to some of that criticism? I mean, obviously, President Trump took many shots, which he alluded to at Jay Powell during his presidency.
Well, that was back then. Let's look at what he said about the future. I think what he said is that whether he jawbones Powell to lower interest rates, first we have to see whether he's even going to be president. But if he is, and he talks about jawboning Powell, he made it very clear it'll depend on what inflation's doing, which I think is a fairly reasonable position. I mean, clearly everybody agrees that in order for the economy to grow sustainably, inflation has to come down. I think it is coming down, and I think Powell has made it clear that he intends to do that. And he's made no promises once that's happened other than to suggest that then interest rates could come down.